topics and opinions expressed in the following show are solely those of the hosts and their guests and not those of W4CY Radio, its employees, or affiliates. We make no recommendations or endorsements for radio show programs, services, or products mentioned on air or on our web. No liability, explicit or implied, shall be extended to W4CY Radio or its employees or affiliates. Any questions or comments should be directed to those show hosts. Thank you for choosing W4CY Radio.
Barry G. Fowler, EA, brings you Tax Talk for You right here on W4CY Radio and Talk4 TV. As an enrolled agent and a national leader in tax resolution, as well as trucker, bookkeeping, and tax planning with over 30 years of experience, Barry will break down taxes, bookkeeping, tax planning, and tax relief for individuals and businesses just like you. So let's have some Tax Talk for You with your host, Barry G. Fowler.
Hey, welcome and good morning. It's a great Monday morning to be here, having Tax Talk for You show. We may get some emphasis of some thunder and lightning, and we're definitely getting a lot of rain here this morning here in Cypress, Texas, just outside of Houston. But we're here to have a good show. And really, the shows come from the questions you guys ask, and what we can talk about. And today's show is all about your side hustle. What you do tax-wise, how you can save money on taxes, and have a little fun with it. So I decided today I was just going to kind of do a Google search, and one of the websites that came up was our wonderful IRS.gov. And, so it was talking about managing taxes for your gig work. And, the first line that we see in here that they have on their website, you must file a tax return if you have net earnings from self-employment of $400 or more from your gig work, side hustle, side job, part-time, temporary, whatever. Whoa, wait a minute. It says net earnings of $400 or more. Now, let me just tell you something. If you get a 1099 for $2,000, but you've netted less than $400, IRS is still going to ask where this was reported on your tax return. They're not going to say, oh, he must have only netted $300. No, they're going to expect to see it on your Schedule C. So kind of a misleading first line on the IRS website about managing your taxes for gig work. If we were going to net down to below 400, you might have had 1099s for $10,000 or $20,000 and it's still been losing money, with depreciation or expenses or startup costs. They're still going to want Schedule C. So don't fall for that. We see people all the time that, oh, I saw this on Google. I saw this on Siri, or I saw this on whatever website they were searching on. Or the better yet is, hey, I was talking to a neighbor, a friend, or somebody out there in business, and they said they never pay tax. Well, sometimes we'd love to see the return. Maybe they're just losing money. And they'll say, no, man, they live in a really big house and they got more stuff than we do. Maybe they're writing off everything under the sun, or maybe they're just not reporting it all. Not necessarily legit. Now, what is your side hustle? Or maybe your gig. The IRS is talking about gig work, certain activity you do to earn income, often through an app or a website, digital platform, like drive a car, car rides, deliveries, rent out property or part of it, run errands, complete tasks, sell goods online, rent equipment, provide creative or professional services, provide other temporary or on-demand freelance work. And that's just some of them that they list, but your side hustle could be an offshoot from your job. Maybe you're a truck driver and you do W-2 driving for somebody else, but then you do special deliveries on weekends or outside of your truck driving job that's maybe local and you're doing other deliveries. Maybe you're doing consulting and similar work that you do, and that you're not competing with your company that you're working for. Maybe you're working in your side hustle as being an electrician or AC repair, or maybe you just like doing repairs and maintenance, and that's your side hustle. All these things, if you're getting paid money, some of them may only pay cash. Some may be through Zelle or Venmo or another cash app out there. And so you're going to have some income potentially reported to the IRS based on the apps that you're using as well. If you're doing one of those gigs for driving or whatever, then you're going to get reports from whoever you're driving with of what you've made. Matter of fact, I'll even help you by tracking some of your miles. Maybe not all of it, but some of it. So you got to be prepared and looking for ways of writing all your expenses off so that you can avoid as much tax as possible. See, your side hustle, depending on how you get set up and where you're going, with this, is going to be taxed for income. So we're going to kind of run through what the taxes are. And then we're going to come back to how maybe you should set up your side hustle for your business so that you can have the best tax strategies to avoid paying as much taxes as possible. And we had a quick question here from Ham. Who reports these earnings to the tax agency? Who reports to the IRS? Well, if you're using maybe Venmo or Zelle or a Cash App, or you're taking and using credit cards through like maybe PayPal or somebody as well, those companies can and do report back to the IRS with the 1099-K. Now, they have some thresholds you've got to get over before they report, but they do report. If you're doing work for a company, the company may be required to issue a 1099 to you as well. Or if you're doing work for another business out there, they may be reporting your income as well on a 1099. Now, they have to reach a threshold of $2,000 in 2026, but they will report that income to you and their expense of what they paid you. So, that 1099, you should be receiving it by the end of January every year. So you would know, hey, this is the income they reported. Now, just because you didn't receive a 1099, does that mean it's not reportable? No. You're supposed to report all of your income. So that means even if you got paid cash, even barter, those things are all supposed to be reported to the IRS, self-reporting. Now, take it from me, if you get audited on your side hustle and you haven't reported all your income, they are going to gross up your income to the full amount. How do they do that? Well, first off, they're going to get every bank statement you had for that year. They're going to total up all your deposits, subtract your W-2s, income if you're getting paychecks and stuff. Then the rest of it is considered taxable. Now, if you come back and able to show that, hey, I got gifts from family and be able to prove those gifts and everything else, then they will subtract that from your total revenue. But then they'll come back and say, this is reportable W-2, or not just W-2 income, it would be reportable Schedule C income for you. And maybe you only reported your 1099s, but not all the cash that you received, and you deposited it all in the bank and they can trace it. Guess what? That all becomes income, adds to your bottom line on your Schedule C. So make sure you're keeping good bookkeeping records of your side hustle so that you have good reporting records, so that if you do go through an audit, it can be a clean audit and not have any issues out there. Now, if you're not depositing cash and you're keeping cash or something, IRS sometimes will come back in and impute a dollar amount for cash. We've seen that happen, that not every part of your business is going to be credit cards or checks deposited. They're going to make an assumption that part of the money that you received was cash. We will help the client go through an audit. TaxationSolutions.net was doing audit representation for this client, and he collected everything 100% through credit cards, no cash whatsoever. And the company, when they were going through the audit, the IRS auditor came back and imputed a value for cash that they just assumed, made the assumption that this client also received cash in for the business and did it as reportable income. We had to dispute and prove that this client never took cash. It was all done through certain companies, and the only way they paid was either check or a credit card. So you got to be prepared to do that. Just got to make sure that you're reporting and you're reporting correctly. And we got a few other questions coming in. We're going to answer those questions after we take a quick break.
We have only scratched the surface of today's show. Please stand by, as Barry G. Fowler will be right back with Tax Talk for You. If you owe the IRS or are going through an IRS audit, don't go at it alone. Call Taxation Solutions Tax Relief at 888-930-1016. We are your solution for IRS debts, audits, back taxes, garnishments, liens, and levies. Whether you're an individual or business, you need a solution and a strong, aggressive tax resolution. Don't let the IRS walk all over you. Stop the IRS now. Call 888-930-1016 or go to TaxationSolutions.net now for a free, no obligation consultation. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. We're talking setting up your side hustle as a business. And we're going to get to talking about how you would want to set up your company as a business, as we talk a little bit more about the taxes and the tax implications of having your side hustle and the things that you kind of need to do. And then we'll get into, how your side hustle should be set up as far as the company structure and stuff goes. We had a great question come in about who is reporting earnings for your side hustle. And we talked about 1099s, NECs, which is the non-employee compensation that you're receiving, 1099Ks that are being reported by merchant service accounts such as PayPal, Venmo, Zelle, all those people out there. So, you kind of got to always watch what you're reporting and making sure you get all your income reported, not just the income that's reported on your 1099s. Steph had a question here. If a company is using QuickBooks for register for sales, would and should the company still seek a bookkeeping service? Steph, that's a great question. First off, I have a better recommendation for keeping track of your business, and that is a software called Xero, Xero. We prefer that actually over QuickBooks. And allows you to do certain things that QuickBooks doesn't allow you to do. But we, as a company that does also, bookkeeping and taxes for people, we like to use Xero for our clients. And I do always suggest you find a good bookkeeping service integrated with a tax service to hire to handle your books, because one, they're going to actually go through the information and make sure you're getting all your deductions. Two, they're going to be able to integrate with what's happening in your taxes and be able to give you advice ahead of time on what you should be doing for your tax situation to help reduce your taxes before April 15th or when you go to file. That's the worst time to get advice, is after the fact, and you can't do anything about it. So those are the kind of things that you would be looking for in getting help with your bookkeeping service, with your tax services, and everything out there. Callie asks, does your company handle the books of a consignment stores? Yes, we can handle the books for consignment stores. We are multifaceted. One of our facets of what we do is we do bookkeeping and taxes for truckers via Trucker Tax Tools. Our sister company, Taxation Solutions, does tax relief, and we also do handle the books for various companies out there. And then we have various partners with us that are working with us closely, that if it aligns with their expertise, we can get aligned with them so that you're getting the quality of service that you need. But yes, we do handle the books for consignment stores. We'll also handle the books for any other retail stores that are out there, daycares, pretty much you name it, we can do it, and we're glad to help you through this. But so as you're looking for that kind of service, you want to find somebody that's kind of integrated, that they can help you with the taxes. We've seen a lot of people that are now out there hawking their wares as a side hustle, as a bookkeeping only service. Those guys, what they're trained to do is just to use a bookkeeping software. Take your information, just put it in and be done. They don't look at the information. They don't clean anything out of your information. They're not there really to help you other than to do some data entry, because they're not taught anything other than, hey, let's make sure that the bank information went in and it's reconciled and we're done. I saw that from a friend of ours who decided they were going to take a bookkeeping class through one of these online services to learn bookkeeping service to sell to you. And they came back to us and said, hey, can you do the taxes? We went, well, we know you really well, so yeah, we can do that. Their first client they brought to us, we went, what is this? And they went, well, it's the bookkeeping. I was trained via XYZ company on something I saw on Facebook and social media, and this is what they showed us how to do. And I went, huh? And the client paid you for this? And they went, yeah. We did it their way, and they pay us really, really well to do this because, we can do this for them. These make no sense. So, make sure it's somebody that's integrated with, being able to do taxes, and, they have more than just experience of some online course, because that's what gets you in trouble. We've seen it through some of the businesses that compete with us on trucking businesses. They do a statement that they call a financial statement, which is really nothing more than what is a cash flow statement: cash in, cash out. Here's where your cash went. But it is not a financial statement. They're showing your payment to, let's say, your truck or your tractor, your equipment, fully being deducted because it's just a cash flow statement. Hey, this is how much money came in, this is where the cash flowed out to, and this is what you have left. Well, it's not a financial statement. It doesn't tell you what you're going to pay tax on. It doesn't tell you what your net income is. It doesn't tell you what your fixed assets are. None of that tells you that. It just says, hey, these are your payments going out. So, you kind of got to watch who's doing financial statements for you and making sure that it's financial statements and something that you can read. I mean, we do things that are really nice that are comparisons and stuff. So, you kind of looking at, what kind of information you're going to get. And then when you're getting that information, so how is it going to be used? Well, as your side hustle, we're looking at the tax implications. And what's one of the biggest taxes you've got to pay on your side hustle? Self-employment taxes. Mr. Fowler, what's self-employment tax? Self-employment tax is the Social Security and Medicare taxes. Now, when you're self-employed, you get to pay both halves. When you're an employee, you pay one half. Your employer pays the other. So it's 15.3% of your net income on your business. So, if your side hustle nets you $10,000 after all your expenses, you're going to pay $1,530 in Social Security taxes. Now, half of that's deductible on your 1040, but you're going to pay that amount of tax. 12.4% Social Security, 2.9% in Medicare. Now, if you've hit the max on your W-2, then you're not going to end up paying this tax over here. Okay, you are going to still pay the half, but you're not going to pay the full 15.3%. Lucky you. Get to pay more tax. Hey, that's why it's important. Get every expense you can possibly get for your business. And if you do hire a bookkeeping company and a tax company, or bookkeeping and tax at one company, the fees you pay them are deductible from your business net income. So keep that in mind. So you're going to be looking at ways to reduce your tax bill, and start by looking at your vehicle mileage. Where are you going for your business? Keep track of it. Anything you're driving for business to and from is going to be deducted at the standard mileage rate, or you can choose actual, but most of the time, most people are going to choose the standard mileage rate. But keep track of your mileage. Use the mileage log. Use a calendar. Chart where you're going. Chart what your expenses are, and go from there. Supplies, equipment, software, marketing materials, tools required for doing the work are all things that are going to be deductible. And you want to make sure you're catching all of those expenses. So the more expenses that relate to business, the lower your net income is from your business, the lower the self-employment taxes are going to be from the business. Now, what other tax are you going to pay as a business? Because taxes can get expensive. So we're going to continue talking about the other taxes and more things you can possibly do to avoid taxation of your net income from your business. And we're going to do that right after the short break.
We have only scratched the surface of today's show. Please stand by as Barry G. Fowler will be right back with Tax Talk for You. As an owner-operator, you already spend too much time away from your family. Trucker Tax Tools handles all your bookkeeping and taxes no matter what level trucker you are. Life on the road can be taxing, but that doesn't mean that your wallet or time with your family should suffer. Trucker Tax Tools makes your life run smoothly. Go to truckertaxtools.com for a free guide that will give you the tools to never worry about your taxes again. Call Trucker Tax Tools 877-966-2477 or go to truckertaxtools.com now and let the experts keep you trucking. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Taxes, taxes, taxes. And that's why we have Tax Talk for You. Now, if you've missed a prior episode, or maybe you missed part of this episode and you want to go back and hear it, you go catch our podcast at taxtalk4u.com. Again, it's taxtalk4u.com. Or, hey, better yet, head over to Facebook and look us up on Facebook. You can see these replays possibly over at taxationsolutions.net's Facebook page, or even Trucker Tax Tools Facebook page, and connect with us, over there, and be able to see these shows and go back and listen to the shows, so that anything you've missed, or maybe we kind of ran through quick and you want to go back and listen to it again, it's a great way to do it. But again, we're talking taxes, and we're talking about your side hustle. And when you're going through and setting up your side hustle, you got to kind of know what the taxes are. And we were talking about self-employment tax at 15.3% that's going to hit you. It's going to come right off the top of your bottom line net income. And so reducing that net income is imperative to reducing your taxes. Now, reducing that net income from your business has a reduction in taxes multiple ways. One, it's going to reduce your self-employment income. One, it's going to reduce the taxes on that self-employment income, such as your federal income tax. And if you're unfortunate enough to live in a state that has a state income tax, it will help reduce the state income tax on that income as well. So you're finding every expense. The other expense that you may have and people overlook is your personal cell phone. What percentage of that cell phone do you use for business? That percentage is deductible. So if it's 50-50, 70-30, whatever that percentage is, you get to take that deduction as well. You can also take possibly the home office deduction, which is a portion of your house, rent, mortgage, utility bills, for a space that is exclusively used for business. Now, we're saying exclusively because that's what the IRS says. Exclusively used for business means you're not deducting your dining room that you're eating dinner and breakfast in. You're not deducting your family room where you're sitting and watching TV or the kids are playing, or the game room. You're deducting an office that is used exclusively for business. If the IRS ever came out and they show up and you've got toys all over the place and whatever else personal stuff all throughout that room, they're going to say, no, this home office is denied. Been a long time since I've seen them do a house visit, but that can happen. Just don't know. Lastly, you've managed to find all your expenses. You've managed to find all the deductions that you can possibly take. You've tracked all your income. You've set up your own bank account just for the business, so you can run everything through there and be able to watch the money. Now, what else can I do to reduce my taxes? Well, you might be able to set up a 401k for your plan, or a simplified employee pension plan to sock money away. That allows you not only to sock the money away on the personal side, but also with your business match with those investments and using those for your retirement accounts. Depending on how your company is set up, there may be other options for you that you go through and do. So now you want to start setting money aside for taxes. If you're not going to hire somebody to help you figure out your estimated taxes, figure out what kind of taxes are going to be paid on this, we always tell you to set aside 25 or 35% of your profits from your side hustle, so that when you do have that surprise at April 15th or when you go to file, you have the money set aside already to pay the taxes. Now, if your taxes weren't that high, hey, you just started a savings plan and you've got money set aside for your business for ups and downs. You know, that is one way you can accomplish it. You know, another thing you're going to have to start doing is looking at paying quarterly tax estimates. The IRS says you got to figure out what you're going to owe and make your quarterly estimated tax payments using IRS Form 1040 ES, or just go online and make the payment at irs.gov payments, and you can make your quarterly estimated tax payments there. Now, if your W-2 withholding is going to be enough to cover and offset your gig income, and you've done the calculation, or you've had your tax professional do that calculation, then estimates aren't required. If you can increase your withholding on your W-2 pay because you have this other income coming in and it'll cover required estimates, then you don't have to make those estimated tax payments as well. All right, now we know we've hit the taxes, we've hit the expenses, we're trying to find all the expenses. How in the world should I set up my business for my side hustle? Do I really need a corporation? Should I be just a DBA? Do I even need a DBA? Do I need an LLC? Do I need to be incorporated? So you have options. You can go out and do DBA, doing business as Jeff's Widgets, and file on Schedule C. You can go out there and set up a company as Jeff Widgets LLC, and you can report as Schedule C, or you can make the election to be an S Corp, or if you have a multi-member LLC, you can file a partnership return. Or you could have went and incorporated and been Jeff Widgets Inc. So Jeff Widgets Incorporated, and you can report as an 1120. Or you can make the election to be an 1120S, which is an S Corp. Wow. Then there's also the general partnerships that are out there. Which option is right for you? Well, from a legality standpoint, the first thing we tell you to do is go consult with an attorney, because they're going to tell you liability protections and other things that you want to know to protect yourself, your assets in your business and personally. So the attorney is going to be the one that's going to advise you for liability protection. We're not attorneys, never wanted to be attorneys, and don't charge legal fees. So don't call me for that legal advice. Call a local attorney that you know. Get the legal advice that you need. Now, tax-wise, which is the best? That's where your tax professional is going to come in to be able to talk to you about what kind of protections you have tax-wise. DBA or no DBA, if you're doing business as yourself out there or doing business as Jeff Widgets, then guess what? That reports on Schedule C. Net income is going to be taxed as we've been discussing self-employment tax on your net income, and all your income's reported on Schedule C, and you go from there. Not a bad way if you're just running a small gig, not expecting to really increase, not expecting anything to really come of it, that you're just doing this to make a little bit of money and you have a little bit of money coming in. So not a bad way of doing it. The expense of setting it up is nil, basically nothing. You can go down to local tax office and get a DBA name. I don't know what they cost these days. I know one time it was $15 or $25. It may be $50 or something now with inflation and cost of government these days. But that's local government, so you'd have to go down there and get that DBA doing business as. Next option is maybe being an LLC, limited liability company. Now, what limits of liability do we have? Again, call your attorney, talk to your attorney, and let's find out from him or her what your company, if you set up your LLC, what the limits of liability would be. What am I liable for? Tax-wise, when you first set it up as a sole member, it is no different than being a DBA, doing business as. It's going to report where? On Schedule C. So when it reports on Schedule C, the net income is still subject to self-employment tax and federal income tax. So, the LLC, as far as paperwork and stuff like that goes, it's a little bit more straightforward, a little bit easier, a little more lenient. When you're talking to your attorney, ask them what kind of paperwork is required of your LLC, what kind of annual meetings is required, what do we have to document. Those are all things your attorney can tell you. From a tax standpoint, you're going to set up a separate bank account for your LLC. You're going to get a separate employer identification number. If you back up to a DBA, it's most likely going to run just under your Social Security number. However, you can file for a employer identification number for your DBA as well. That is required if you're going to actually have payroll for employees, not yourself, employees, and therefore you can run that way. Your LLC is going to have its own employer identification number, its own bank account under that employer identification number. When you are working for somebody and they request a W-9, you're going to fill it out for your LLC and give them the employer identification number for the LLC, so that when they give you a 1099, if they give you a 1099 for your LLC, it's reported underneath the company itself. Now, your gross revenue and all your expenses and everything else is going to be reported on Schedule C, unless you make the election to be a S Corp, or when you set it up as a multi-member LLC, then you would report as a partnership for a multi-member. So, got to keep those things in mind as well. Now, we're going to take a short break. When we come back, we're going to talk about multi-member reporting and S Corp reporting, and then we'll get into Jeff's Widgets Inc. and talk about how they're going to be taxed, so how you would set up your business on that side as well. We're going to do that right after this.
We have only scratched the surface of today's show. Please stand by, as Barry G. Fowler will be right back with Tax Talk for You. As an owner-operator, you already spend too much time away from your family. Stop spending time doing paperwork. Go to TruckerTaxTools.com, a solution built specifically for truckers. TruckerTaxTools.com makes your life run smoothly. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. Oh man, I had a great question, and guess who it came from? Jeff. He must be the owner of Jeff Widgets. Just kidding, but yeah, we did a question from Jeff come in. And the question from Jeff is going to be the topic of next week's show. How about that? I told you we get good questions coming in here, and we end up with the topic for next week's show. What happens tax-wise when I sell my business? Hey, that's a great question. It'll be a nice long discussion of what you got to do when you're selling your business and the tax implications of selling your business. And guess what? Those tax implications can vary based on entity structure and the way you sell your business as well. Hey, back to setting up that side hustle. Before you sell it, you got to actually run it and make some money. So you have something to sell. And we're talking about, LLCs. Now, when you're a multi-member LLC, you have to report as a partnership. Now, you can make that S Corp election, but there's some advantages to a partnership. So if it's just you and your partner or partners working in the business, you get paid by guaranteed payments. As opposed to if you make the election to move your LLC to a S Corp, then you get paid by W-2 payroll. If you're still a single member LLC reporting on the Schedule C, you don't report payroll, whatsoever, because your bottom line is taxed for that self-employment income and stuff out there. So, what's the best way? It's really going to depend on net income for your business. If you're a multi-member, partnership is the ideal way of doing it on a 1065 because we can manipulate guaranteed payments to be reasonable pay. If you're a single member, we're going to be looking at net income. Now, we're going to explain how we're going to look at net income after we talk about corporations out there, why you make an S Corp election for both either an Inc. or a LLC. So when you set up the Jeff Widgets Inc., you're automatically going to be reporting on an 1120, which is an 1120 is C corporation. Corporation pays its taxes, makes a distribution to you as dividends, and then you pay tax again. Double taxation. Get away from that quick. We don't want double taxation. You're going to make the S Corp election at that point. Really no choice in doing that because it avoids double taxation, being taxed at the corporate level and then taxed on the personal level as well. Now, if you were an LLC and making that election, it's based on net income. So there's a huge difference between an Inc. and an LLC on when you make the S Corp election. So as an Inc., you make the S Corp election when your net income gets high enough that you can pay yourself a reasonable salary, which is less than the net income of the business, which then the reasonable salary is the amount that you're going to pay yourself via W-2, and then the net income only gets taxed for federal and state income tax, not self-employment tax. The self-employment tax is based purely on your W-2 pay and is split between company and personal. But remember, you're the company as well, and the company owner, so you're paying both halves regardless. So what is preferred? Well, if you can manage being a multi-member with maybe husband and wife, you can run as a multi-member partnership out there, file 1065, never have to do payroll unless you have employees. If you're looking for a company that's going to give you the ability to have the most deductions and give you the most benefits, you can manage to do it through a C Corp because you're going to have to be on payroll there, and it can give you a lot of benefits, more than any other company, because the company's paying you like a Exxon or one of the larger companies out there. SpaceX, let's take for example, who just went through their IPO this last Friday, and so paying a lot more benefits to you through the company that avoids tax, but maybe gets you taxed later. So there's things you've got to look at out there to do. So there's a lot of questions when you're doing this, and the first thing I tell you to do when you're getting out there to set up your company is call your tax guy. Talk to your tax guy or gal and find out what the implications are of the type of company that you're going to start. And I always tell you, if you're dreaming, dream big. If you dream small, you may achieve your dreams, but you didn't do anything really big with it. We always set our goals, and we set 3, 5, 10, 15-year goals. If you can accomplish those 5-year goals in 3 years, or 5-year goals in 2 years, or 10 years goals in 5 years, see, you are striving, and now your goals can become bigger and better. Whatever it is, Don't just dream small, dream big. It doesn't cost that much to go and set up your corporation through your state. If you do it yourself, state filing fees may be, $200-$300. If you do it through your attorney, you may pay $1,500 to $2,000 for your attorney, maybe more. But you get all the books and everything else you need to know. So you've got a professional on your side and somebody that's there to help you. Yeah, the lawyers are going to continue to charge you hourly when you call, but that happens. So you've kind of got to look at those things and decide what's going to be best for you and best for your business and what's going to benefit you longer down the road. Hey, we've got a quick question that came in, and I know it's kind of off the topic of setting up your side hustle, but it kind of goes with it. You've set up your side hustle and you've met your goals and your dreams, and it's now big enough to replace your income from the job you work. You left your job and you had a 401k. And, whether you're going to a new company with a 401k or you're going to go into your own business with a 401k, should you pull it out? Should you transfer it? What's going to happen? And then there's a tax on this. So what's going to happen is this. If you pull the money out, if you just withdraw it 100%, take a distribution to yourself, you're going to pay tax. If you're less than 59.5, you're going to have the penalties at 10%. You're going to pay the income tax on it. And it's something I tell you, hey, you've started saving, don't do it. Roll it over to your traditional IRA, or if this is a 401k Roth, you can roll it over to your own personal Roth and keep the money in a retirement account. You're not going to have the opportunity usually to roll it over to the new company that you went to work for. However, depending on how you set up your business, your side hustle, you might be able to roll it over into the 401k or SEP or traditional plan you're using for the business. Talk to your retirement specialist that you're going to be using for your side hustle or your new company and get that clear. If you're not able to transfer it into your existing or new IRA, transfer it into the IRA that you have personally, or set up one through Fidelity or Schwab or Robinhood, or one of them that allows you to set up those retirement accounts and do a direct rollover to you. Don't roll to your account and then roll over to your IRA, because you could get you in trouble. Do a direct rollover. And so again, if you pull the money out, there's going to be that tax. It's going to be a penalty and income if you're over the 59.5. You get rid of the penalty, but then you're going to be still subject to income tax on that at whatever your marginal tax rate is. So it could get expensive. Wow, time flies when we're having fun and we're talking about great subjects. Like I said, next week we're going to talk about what happens when you sell your business, sell your side hustles. Your business became big and now you can sell it and you're going to make money for it. How do you sell it? What do you do? What's the tax implications and all that? Can we avoid the taxes? What can we do? We're going to talk about that next week. Man, it's always great to be here. Don't ever miss an episode on W4CY Radio here. TaxTalk4U.com is here every Monday at 10 a.m. Eastern Time. If I got to be here, you got to be here. So be here with us. Let us talk about your taxes. Ask your questions. We'll get them answered. Again, join us next week, 10 a.m. Eastern Time. And, be here to talk about that. If you do miss an episode, don't forget, go to TaxTalk4U.com. You can follow us over there, catch all of our podcasts, or you can go to iHeart, Spotify, Spreaker, you name it, we're pretty much on it. So you can find our shows and podcasts over there. We're trying to do as good a job of getting them up as quick as possible. So don't ever miss an episode. But if you do, find us at TaxTalk4U.com. And again, you can also go to Facebook and see us over there, as well as Trucker Tax Tools taxationsolutions.com or even taxationsolutions.net. We'll see you next week, 10 a.m. Eastern Time, right here on W4CY Radio and TaxTalk4U.com. See you next week. Have a God-blessed and glorious week.
Are you an individual or business that wants to understand taxes and how they affect you? Are you looking for specific tax advice for self-employed, business owners, and truckers? Are you behind on taxes and your bookkeeping? Are you dealing with the IRS and ready to have some relief? Then you need Tax Talk for You, hosted by tax and trucker expert Barry G. Fowler, EA. Tune in 10 a.m. Eastern Time every Monday right here on W4CY Radio and Talk4 TV. Don't forget to check this and past episodes at TaxTalk4U.com. See you next week at W4CY.com.